Many people characterize penny stocks as hidden treasures scattered across the market. This reputation stems from their propensity to go undetected by the general market, which implies that goods may be selling much below their intrinsic values. This is why it is typical for certain stocks to rise from $2 to $20 in a couple of years. With proper preparation, aggressively buying such stocks might result in investors amassing a fortune in a short period of time. Each of the stocks highlighted in this video is perfect for generating the type of growth that many in the market crave, and hence are excellent investments in which to take long holdings. We showcase the best 5 penny stocks that may be purchased for less than $2 per share. The first penny stock we take a look at is the promising biotech company, Orchard Therapeutics Inc., which trades by the ticker ORTX. Orchard Therapeutics primarily specializes in genetic therapies for some of the rarest and most life-threatening conditions. These are one-time administered hematopoietic stem cell treatments, which replace faulty mutations within the patient's gene. The company's most well-known drug is LLAP, which treats metachromatic leukodystrophy, a rare disease impacting 1 in every 100,000 newborn babies. Infants suffering from this genetic condition suffer seizures, motor dysfunction, and a range of other forms of cognitive regression, and typically are unable to live beyond the age of 5. LLAP is the only treatment for this condition, and has been approved across several European countries. Its price of $2.7 million makes it the most expensive drug in the world, owing to the rarity of the disease it addresses. Orchard Therapeutics is expected to approach the FDA for approval in the US market, which would likely take place towards the end of 2023. This anticipated approval would surely act as a major price catalyst for ORTX. Additionally, Orchard also holds promising long-term prospects of synergizing the clinical successes of its various candidates to strengthen its genetic treatment platform, allowing it to come up with effective treatments for ALS, Crohn's disease and many more. Above all, now is a great entry point for investors to enter into ORTX, considering its 55% price shed in the last 12 months, despite stellar fundamentals. For its third quarter results, the company saw its revenue surge from $1.2 million to a staggering $5.8 million. Moreover, its $146 million cash holding gives it sufficient runway to push on smoothly till mid-2024. Despite this, ORTX is trading close to 52-week close, making it a bargain at its 58-cent price. This penny stock is clearly too good to ignore. The second stock on our list is the cannabis market's top e-commerce platform and software solution provider, Aeva Technologies, which holds the trade ticker MAPS. Its Weedmaps online platform allows users to identify the closest marijuana dispensary closest to them, while providing marketing to these cannabis providers. Aeva Technologies is a leader in this game, and faces no real competition to the valuable concept it brings to the table. Despite this, its stock price has been gutted in the last 2 years, falling from $29 in 2021, to its present price of $1. This fall can be explained by a number of factors, which includes the astronomical price multiples for the tech and cannabis sectors, during the post-COVID markets of 2021. Similarly, the company is presently facing the brunt of the complications of the California cannabis market, with thousands of unlicensed players operating at a severe cost advantage, given their untaxed operations. This factor has led to a serious impairment in the books of WM Tech, during the third quarter of 2022. Despite this, WM stands on the brink of tremendous opportunity. For one, Weedmaps is an undisputed leader in the cannabis marketing business, and its bounce back following these troubling times remains an inevitability. Secondly, its growth runway is enormous, as its revenue from large multi-state operators stands at less than 5% of the total. It also faces tremendous expansion potential across several US states. Above all, analysts largely seem to agree that the mass sell-off has brought down MAPS to dirt cheap levels, whereas its target price is currently $4. Everything about this penny stock makes it a screaming buy. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is the Florida-based satellite manufacturer, Terran Orbital Corporation, which goes by the trade ticker, LLAP. Its stock price has plummeted from $10 to $1.50 since its IPO in March 2022, which has proven to be among the harshest of times for an IPO to be conducted. With a market capitalization of below $200 million, and delivering growing losses, LLAP was a natural target to be taken down by market bears. Despite this, however, it remains an extremely promising play for those patient enough to take this ride. The strongest metric to gauge the sheer promise of Terran Orbital is its fast-growing backlog, which has climbed to $198 million, translating to an annual jump of 164%. Similarly, top-line growth remains incredible, with revenue in the third quarter jumping from $10.3 million to $27.8 million on a year-on-year basis. Although losses do appear to be growing at a similar pace, considering this small company's struggle to scale up its production, Terran Orbital is definitely on the right track. Recently, it received $100 million in financing from the defense industry leader, Lockheed Martin, which comes as a much-needed cash injection for its progress. The management has stated its plans to use the funds for manufacturing capacity expansion and working capital, which will be sure to accelerate the growth of the company. The stock has a very bright future, and is a great pick for those seeking long-term growth. The fourth stock we present is of the niche sensor technology company, Aeva Technologies Inc, which goes by the ticker, AEVA. Like most tech companies, Aeva suffered supply chain constraints during most of 2022, causing an adverse impact upon its revenue figure, which during the third quarter, dropped from $3.5 million to merely $1.4 million. Despite this, however, Aeva has a strong competitive advantage in its toolkit, which is its highly promising 4D LiDAR on-chip technology. According to the management, the order books on 4D LiDAR is expected to see drastic expansion within the upcoming months. In fact, interest surrounding Aeva's products has grown so considerably, which it gauges from quote requests from original equipment manufacturers. The chip technology offered by Aeva is superior from a competitive advantage, primarily due to it being both high quality and scalable. Aeva Tech is presently in the contract phase of its business, scouting for automakers and original equipment manufacturers to break through. Supported by strong tailwinds from EV demand, this is likely to see explosive growth this year. To add to this stock's factor of appeal, the company is strapped with $350 million in cash, which is equivalent to its market capitalization. This allows Aeva to smoothly continue its R&D activities, and build on its strength to capture the addressable market before it. AEVA is the ideal pick for investors seeking explosive growth during 2023. The final stock on our list is that of the satellite services and IoT company, Globalstar Inc, which goes by the ticker, GSAT. At its price of $1.30, GSAT is currently on a bargain, considering the strong tailwinds and catalysts it faces in the near-term future. The most significant of updates regarding Globalstar is its strategic partnership with Apple Inc, which will be employing low Earth orbit satellite services by the company for emergency calls, in its iPhone 14 and 14 Pro models. The revenue from this arrangement to the company is expected to amount in the hundreds of millions of dollars, and will be subject to several milestone achievements. With Globalstar satellites facing integration to the wider Apple ecosystem, its growth potential could explode, and allow the company to expand upon its business, and reach out to other giant clients. Similarly, Globalstar has also been making strides in the promising Internet of Things realm, especially in regards to its unique two-way connectivity features, which have not yet been introduced in the market. The application of this could be staggering, given its utility to several critical industries across the world. It could also be beneficial to the company in terms of its association with the Apple ecosystem. With a gross profit margin of 55%, GSTAR is extremely profitable, so its surging growth in the upcoming years is likely to financially strengthen its balance sheet, allowing it to expand into promising markets. GSTAR is definitely a penny stock to keep on one's radar, especially given the strong opportunities laid before it. That's all from us in this video. We hope that the information presented has been insightful, and has managed to shed light on some highly promising penny stocks for your portfolio. We would love to hear your thoughts in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to visit our website, stockstelegraph.com.